All right, let's get straight to it. The Federal Reserve just dropped a huge hint about its next move. And if you have money in the market, you absolutely need a plan. And that's exactly what we're going to build right here, right now. A clear, step-by-step investment playbook for the rest of 2025.
So here's how we're going to break it down. First, we'll unpack what the Fed's signal really means. Then we'll explore the three most likely ways the market could play out. From there, we'll dive into an actionable game plan you can actually use. And finally, we'll wrap it all up with the one big takeaway. Let's do this. Okay, first things first, we have to talk about the catalyst. The one thing that's setting all of this in motion. The entire market is hanging on a single powerful signal from the Fed that a big policy change is coming. And this right here, this is the million-dollar question, isn't it? It's what every single one of us is trying to figure out. By the time we're done here, you won't just understand the question. You'll have a solid framework to answer it for your own portfolio.
So here's the headline news. Fed Chair Powell is basically pointing a giant neon sign at a rate cut in September. And his reason is the real key here. The job market is finally starting to chill out. For the Fed, a calmer job market means less upward pressure on wages and inflation. And that gives them the green light they've been waiting for to ease up.
But listen, this is a super important point that you have to get right. The market is always trying to look around the corner. It's already priced in this first cut. The news itself isn't what's going to move your portfolio. What really matters now are two things. First, how many more cuts are coming after this one? And second, can the Fed actually pull this off without letting inflation rear its ugly head again? That's where the real opportunity and the real risk is hiding. Look, none of us have a crystal ball, so a smart investor doesn't predict the future, they prepare for it. With the Fed's move acting as the trigger, the market could really go down one of three different roads. So let's analyze the bull, the base, and the bear case for the rest of the year. So the base case, our sort of middle-of-the-road scenario, is the most likely at a 50% probability. But here's the thing, you can't ignore the other two. The bull and bear cases are each sitting at 25%. You add those together, and there's literally a 50-50 chance the market ends the year way better or way worse than expected. And that is precisely why we need a plan for each one. Let's dig into what drives these. The bull case, that's your Goldilocks story. Everything goes just right. Jobs cool off gently, inflation behaves, and the Fed gives us two rate cuts, one in September and another in December. The market loves that and rallies 12 to 15%. Now, the base case is a little bit messier. We get mixed signals, inflation is kind of sticky, so the Fed only delivers one cut. The market pretty much flatlines. And then there's the bear case. This is where we get a nasty surprise. The economy is either way too weak or inflation gets too hot. The Fed is forced into a single, reluctant cut with a hawkish tone, and that can easily spark a serious 8 to 12% correction. And this chart right here, it really puts the stakes into perspective. The difference between the best and worst case is huge. We're talking a potential swing of over 20 percentage points in your portfolio. When you're facing that kind of uncertainty, just sitting back and hoping for the best is not a strategy. You need to be tactical. Okay, analysis is done. Now for the part that really matters. What do you actually do with all this? Let's roll up our sleeves and get into the practical, step-by-step game plan for your investments. This quote is our guiding principle. It's the whole strategy in one sentence. We are not saying sell everything and run for the hills. And we are definitely not saying go all in and chase this rally. The message is to be tactical. The easy money from the first rate cut news has already been made. Your edge now comes from being smarter and more disciplined than everyone else. So here it is, your 4-step playbook. Step 1, stay tactical. Don't chase. Step 2, use the pullbacks. The market's probably going to get choppy in September. See that dip as your chance to buy, not a reason to panic. Step 3, trim weakness. This just means take a little profit off the table from your biggest winners. That's just smart portfolio management. And step 4, the most important one, keep your powder dry. Have cash on the sidelines ready to deploy. And let's put a hard number on that. We're talking about having about 10 to 15% of your portfolio in cash. Now, this is not about being fearful. This is about being prepared. Think of that cash as your dry powder. It's your war chest. It's the capital you're going to use to go on offense and buy incredible assets when the market gets nervous and gives you a discount. So where are you aiming that dry powder? You're looking for what we call high beta stocks. Don't let the jargon scare you. It just means stocks that are a bit more volatile, your high growth names. Think AI, bleeding edge tech, semiconductors, even some crypto-linked companies. And why them? Because when the market dips, these are the names that tend to dip the hardest, which means you get the best possible prices on what could be the biggest growth stories of the next few years.
Okay, let's bring it all together. We've talked about the Fed's signal, the market scenarios, and your tactical plan. Now let's lock in the final takeaway. These are the key points you need to remember for the rest of the year.
So here's the bottom line. This shift from the Fed is good news, for sure, but it is not a free pass to just buy anything. Your strategy should be to lean bullish, but stay tactical. That means you should fully expect some volatility around September, but you're going to use that volatility as your entry point, not a reason to hit the panic button. And you're going to focus your capital on those high-conviction growth sectors we talked about, AI, semis, and crypto-linked stocks. That's how you position yourself for what's coming.
The Federal Reserve has shown its hand. The market is already making its next move. The signals are there, the potential paths are clear, and now you have a playbook. The only question left is, are you ready to play?